and your personnel team are involved in the building of the budget because they're stakeholders in the outcome. So it feels important to me that stakeholders ought to be involved in the construction of that, and that can really help. Can any staff member vote on the personnel portion of the budget? According to most common practice, the answer to that should be no. That you have a stake in the outcome of that in terms of voting on it. That's a conflict of interest, and at the very least you should abstain. Many congregations simply ask their staff to step out when they deal with the personnel portion of the budget. I don't know that I like having to step out of the room. I think if it involves the staff salary, particularly the senior minister of a multi-staff congregation, you need to be there to advocate for your staff. But then when it comes time to vote, you really don't get a vote. How's that final budget adopted, and by whom? Is it done by the board, by the cabinet? Does it come before the congregation? A trend that I think is helpful is that budgets have not been going back in all of our congregations to the congregation in a congregational meeting. That has been entrusted to the board, and the finance team, in coordination with the program units, personnel, and others, put together a budget. It goes through a cabinet process where it's refined, comes to the board, and is approved by the board. Because the congregation is not always equipped to deal with some of the subtleties and fine points of the budget, and they may look at something that doesn't look right to them, not having been involved in the process of building the budget, may not understand, and you can get into a kind of a nasty situation on the floor, if you will, of a congregational meeting that you don't really want to be in. So is there a way you can refine your process? In smaller churches, this is not as important as it is in larger churches, that the budget is being managed and looked over by a smaller group who are entrusted with that responsibility and are accountable. And of course, the congregation always ultimately votes on a budget in the offering plate. If they don't like the budget, you're going to know it. If the budget is approved by a board or congregation and turns out not to be adequate, is there a process to appeal that? Or what if the budget needs to be amended mid-year? Who does that? You know, we hire a new staff person, we change lawn services, and it costs more. At what number, at what dollar value or percentage of the budget does it require action by the board or the cabinet or somebody more than the finance team and the treasurer to make a change in the budget? Who has that final authority? That's an important question to know and understand. Related to personnel, and as you move into ministry, you will discover this is pretty important. What written policies are in place regarding salaries and benefits? How is it that we determine what we will pay our staff and how their package will be structured? For most ministers in the Christian Church Disciples of Christ, congregations will come at your salary as a package. You get $75,000 is all we can give you, and we can divide that however you like, but that's your pension, your health care, your housing, your auto expense. It's the whole deal. This is the most we can do to fund a minister, and you decide how you want it broken up, and we'll work with you to do that, and then that's your package. But what are the benefits we will provide for our staff? Do we provide health or pension benefits for only full-time staff, or do we for part-time staff? How do we understand educational expenses? Expense reimbursement. Are there limits? Is there a line item in the budget for it? And do we pay the IRS standard rate for gas for mileage or not? Those policies need to be written down and not at the whim of whichever way the wind is blowing at a finance committee meeting. So that's important. That's why that's important. How is the policy determined, and how are staff being evaluated? Does your job performance play a role in determining your salary and or benefit increases or decreases? I believe that it should. I believe that churches, being fair to their staff and personnel, should consider merit wages. The problem, of course, is that most churches try to balance the budget in part on the back of the staff. Well, we just don't have enough money to give increases this year. Well, is that fair? Should we at least give a cost of living wage? Should we at least keep the benefit package the same? Well, we can't give you more salary, but your health insurance went up 5%, and we've promised to provide you health insurance. That's the top of the slide there. What written policies are in place? We're going to provide your health insurance at either no cost to you or at you contribute 5% or 10%. Whatever that is needs to be written down so there's a clear understanding. And then what does that mean then when the church is short on money and trying to balance the budget? It ought to mean then we got a policy that says you can't take away health care benefits. Okay, that's why having this stuff written down is so important. A COLA is a cost of living adjustment, and I believe there ought to be a cost of living adjustment in every church's policy handbook for personnel, that unless there is some dire reason not to, the church ought to at least tie to an index, and the Social Security cost of living is a common one because it's blanket across the country, but there are regional indexes. If you live in California or you live along the East Coast, those are different places than living in the middle of Kansas in terms of how inflation works in your life and how expensive it is to live in a place. And living in Versailles, Kentucky is a lot more expensive than living in Little Rock, Arkansas. So do you use a regional index or do you use a nationwide index? But, in a best case scenario, it would be a church's policy that we will provide these benefits regardless of what they cost. We will provide these benefits, and we will give a cost of living raise, which is a way of making sure you are not losing buying power in your salary. The other thing it does for the church, which it's often hard to get the congregation to understand, is it helps assure the replacement cost of the minister. It happens more often than not that a church will have a long-term ministry of 8, 10, 12, 14 years. They've not been really good with managing their personnel policy and making sure that their pay package has moved along with inflation so that what that position was worth when they hired that minister is what it's worth today. And suddenly they need to add $5 or $8 or $10, $12,000 to their salary package to draw an equivalently qualified pastor, and they're not able to do it. So the less painful way is to go with those annual increases in those things, and then there's no shock, there's no sticker shock when you go to replace a pastor. So this is really in the congregation's best interest as much as it is in the pastor's best interest. And if you're doing a good job, there really is no reason why you should not be paid at the same level you were the previous year. So the COLA becomes real important. Well, how do we know if we're doing a good job? Well, there's the middle point in this slide. Do you get a job performance review? That, I think, is critical. You should get an evaluation annually, and it ought to be a meaningful dialogue and conversation. You need to be thick-skinned and strong enough to hear criticism about the areas where you need improvement, and the congregation needs to be generous and complimentary about the ways in which you are serving them that they appreciate and feel that are growing edges for them that you contribute to the life. Next piece is important. Are all accounts audited? And how often and by whom? Annually, you can do a review Surely you have a CPA, somebody around the church that knows something about numbers, can sit down and help guide you through a very simple, what we call a spot audit, that checks financial reports and receipts against expenses and cash payments. That takes a couple of hours on a Saturday morning. You sit down with a financial secretary, the treasurer, and 2 or 3 other folks who know numbers. Everybody brings their books and receipts and paperwork in, and we sit down and we just match some things up to be sure that they are accurate. But this should be done not only for the church's annual fund budget, but the capital account should be checked. The endowment report and process should be checked. And the Boy Scouts, the CWF, the Friendship Sunday School class, the Weight Watchers group, whoever is using your building. Now, Weight Watchers can't do that. It's a bad example. But if you have a group, a nonprofit group, that is using your tax ID number, your 501c3 status, then you have a right to look at their books. And if they don't like it, then they can go find another tax-exempt status number to use. Because you ultimately are responsible, and misconduct or malfeasance by them can cost you your status and lose your 501c3 status, and just kind of figure out what's going to happen to your annual giving. You must be a 501c3 charity nonprofit, in order to allow people who make contributions to you to be tax deductible. You want to protect that status. So I don't care who it is, if they're using your number, and the Boy Scouts they're living under your umbrella, then you need to see their books, and you need to do it annually to be sure that there's no funny business there. And then when the audit team is done, who does that report go to? Well, it ought to go to the finance committee and then to the board. And if you have a good audit team together, somebody who really is a CPA, or you've borrowed a CPA from a neighboring church to come in and help you, they should provide a form of a management letter. A management letter is a review of policy and practice and suggestions how to improve, suggesting changes that may need to be made, or would make, if made, would make life easier. And then those need to be responded to. I was a member of a congregation for years that we were real good about doing an audit, and we'd get a good management letter. It would be received by the board, and nobody would do anything with it. And that was kind of silly. And whoever's on that team, and whoever's that team is reporting to, needs to be sure then that they meet with the financial secretary, the treasurer, the whomever, where improvements are suggested, desirable, or necessary, and that those folks carry out those changes. And if they're not willing to carry out those changes, if there are issues that put your 501c3 at risk, if there are issues that are unethical or outside the bounds of normal accounting practices, and they're not willing to change, then you need to change the personnel doing those tasks. And that's very important. It's all around that trust issue, but it's also keeping your rear end out of jail. Or keeping your tax status in the nonprofit exempt area where you want it to be. What policy is in place to receive bequests or other large undesignated gifts? This is a huge issue. I make a promise to you that if you don't have such a policy and someone dies and leaves money to the church, guaranteed 3 things are going to happen. 1, your next board meeting will be the best attended. 2, everybody is going to know how old Aunt Bertha wanted that money spent. And 3, if there are 50 people in the room, there are going to be 51 different ideas about how Aunt Bertha wanted that money spent. You do not want to have that kind of fight, disagreement, or difficulty around something that has the power to do such good. You don't want to contaminate it with that. So you need to be prepared ahead of time. And Christian Church Foundation can help you do that. That's, if you're a disciple, that's what they're there for. They can help your church craft a policy to receive bequests or other large undesignated gifts.